Hello, everybody. Welcome to our next debate. Thank you for being here. It will be a huge topic, financing the future of Europe. We will try to break it down for you in an interesting way. Briefly, we don't have much time, so I will ask you to respond really to the point. I'm Christian Schubert. I'm a journalist working for Frankfurter Allgemeine Zeitung in Rome. And much more importantly, our guests, I want to introduce them briefly. We have Christina Papaconstantinou, the Deputy Governor of the Bank of Greece. We have right here next to me, Marialena Athanasopoulou, the Deputy Head of Economic Risk Analysis of the ESM, the European Stability Mechanism. And we have Silvia Merler, researcher from the research institution Bruegel in Brussels. So thank you very much. I will start with Christina. As you are here, the representative for Greece, if I may say so, Greece had a very impressive comeback, recovery. Greece is still benefiting from in a way, the rescue package, if I may say so, with low interest rates and long maturities. This will run out at the beginning of the next decade, 2030, 2032. What will happen then? And has Greece used its time, and is Greece using its time properly to prepare for that time?
Thank you, Christian, and it's a pleasure for me to be participating in this panel with you and the rest of the colleagues. As you rightly pointed out, Greece has turned the page, and I think that the success of the Greek story is clearly demonstrated by the strong resilience of the Greek economy to adverse macroeconomic and fiscal shocks. Now, in terms of debt sustainability, the debt trajectory is projected to follow a steep downward path, and this will not be jeopardized in the medium term by any adverse macroeconomic scenario. And this is important that it was possible thanks to the combination of the favorable characteristics of the debt portfolio, you refer to them, and also a sound fiscal position. So, as you implied, as you said, this will change over time in the sense that as time passes, the official sector loans will gradually start to be replaced by marketable loan, and this will be done, which means that the official debt will be replaced with marketable debt at slightly higher financing costs and slower maturity. So yes, when we pass the medium term, the risks to debt sustainability are gradually going to increase, and I'm referring in particular to interest rate risk, to market risks, to refinancing risks. So what we need to do in order to achieve this continuation of our efforts to lower the debt to GDP ratio and manage to converge to the EU average, I think simply to continue what we're doing right now, continue to implement a sound fiscal policy, make sure that we maintain sizable primary surpluses of around 2% on average. I think this will be very important elements and will help this to continue this downward path of the debt trajectory. At the same time, I think that the country has a big window opportunity to progress with the implementation of investments, the implementation of reforms, that are totally necessary, that will help also the country in their totality to address all the challenges, including those that come from its debt portfolio. And in that respect, I think that it is also important to ensure that the implementation of the National Resilience and Recovery Plan is done in the right we have agreed and remain on the path that we have already started to cross.
And it remains, of course, very important that the international investors increase their confidence, and the fact that you are now investment grade helps that significantly, I would say. Marialena, if I may come to you, the ESM is a very important institution for financing Europe. That's our topic. But at the moment, I'm based in Rome, so I know a little bit about that. Italy is blocking the latest reforms of the ESM. What does this mean? Is the ESM actually functioning the way it should be functioning?
Okay. Thank you, Christian, for giving me the opportunity to address this very, very important question. So indeed, the ESM, the European Stability Mechanism, has a very significant role to play in the European architecture. It's a permanent institution to help preventing and managing crisis. What does this mean? How do we do that? In peace times, we monitor vulnerabilities and risks, we advise on how to address them. And when a crisis hits, we're there to help manage the crisis, but also provide funds if necessary. This is a safety net. It's an insurance, and it's an insurance that Europe needs in order to make sure that it's well prepared. Now, let's look a little bit on the recent history. Christina already mentioned about the Greek development, the good developments for Greece. But there are 5 countries in Europe that have already benefited from EFSF, the predecessor in ESM financing, during the sovereign debt crisis. And for all of them, we're looking at success stories over the last 2-3 years. Cyprus, Portugal, Ireland, Spain, Greece, they're all best performance in terms of growth and fiscal position. And this did not come by chance. It's the country's efforts, but also the support from ESM during the difficult times. And we managed to do this under the current treaty, the treaty that is currently now already ratified by all countries, including Italy. Now, in 2018, after the sovereign debt crisis, just to give a little bit of the background, the Euro area finance ministers decided to ring-fence, intensify, strengthen the preparedness of Europe. And one of the key elements was to strengthen the ESM role in terms of preventing and managing crisis. This is the new treaty. Now, as I mentioned, we have the existing treaty allows ESM to provide financing, preventing crisis and managing crisis in a very efficient way. We have seen it from the 5 success stories. The fact that Italy has not ratified yet is not a blocking, is a missed opportunity for Europe to ring-fence even stronger financial stability in Europe. Of course, we always respect the decisions of the democratic parliaments in Europe. It's our stakeholders at the ESM.
And the banking union remains also because of this unfinished, if I understand correctly, huh? Because we don't have a common backstop that would complete the banking union. Silvia, Merler, I would like to ask you, when you talk about financing the future of Europe, of course the crucial and eternal question remains how much should be financed on the European level, how much should be financed on the national level, because of course the national level always remains there. And don't we have there a political dilemma? These days we have a lot of right-wing parties increasing their popularity, and they are often arguing that we have too much competencies on the European level. It is a dilemma, right? How can we get out of this dilemma?
That's an excellent question that I wish I knew the full answer to, but unfortunately, I think we can only maybe look at past experiences of initiatives that have been taken at the EU level to sort of use as a guidance in answering that question. And I think when you say there's a lot of risk for backlash at the national level, I think that is entirely right. And coming from Italy, the story of the ESM ratification treaty is also something that I have been followed very closely, and I think it points in that direction because it really is a purely political standpoint now, not even substantiated, I think. But when we look at the experience of the post-COVID recovery, I think that is very good guidance for what might garner support as spending at the EU level. So I think what the key intuition with COVID was at the EU level was that we were facing a symmetric shock of unprecedented proportion that was hitting all countries on a systemic level, and that the clear realization that nobody would be able to deal with this on their own. And even more so countries that had a tight fiscal space, not because they had been running particularly ease fiscal policies in the previous years, but because there was a legacy of a decade of crisis that we have been going through as Europeans. So I think as long as this is the narrative and the message, there is going to be support for spending at the EU level. Now, obviously, one area that comes to mind now is defense, because following the war in Ukraine is a very similar story, right? So. When discussing COVID, a lot of reference was made to being at war with a virus. Now we actually are at war in the historical sense of the term. And so I think a similar response would be warranted, and also think that probably that would be supported by citizens throughout Europe as well. It is always, of course, a risk that there is going to be political backlash, but I think as long as it is very clear that this is financing EU-level response to a genuinely EU-level challenge, that will succeed.
No, I think that's a very important argument to say that a nation alone cannot cope with certain problems, right? We get to the so-called European public goods, or in terms of climate, even a global public good, right? One European public good might be the capital union that we still don't, the capital market union that we still don't have, Christina. Why don't we have it, and why would it be good to have it?
I mean, the answer to your question, why we don't have it, I think it's mostly a question of political willingness. So we need the political will to have the capital markets union. If there are benefits, yes, of course. There are only bad benefits, and I can start naming a lot of them. I think it's even more important now, and for many reasons, to ensure that we go along, that we make progress at safeguarding that we will have a well-integrated capital market union throughout the EU. This will allow for capital to move around the EU. This will protect us from eventual shocks. This will help to support innovation. This will, if you want, diversify the different sources of funding for all these big investment needs that Europe needs right now. I can name the digital transformation, and I can insist and focus on climate change. All these needs demand for a lot of investment to be done in Europe. So we need to make sure that we totally exhaust every means, every possibility for the private sector to give the opportunity to the private sector to mobilize any available resources. the role of the central banks is there to safeguard price stability. So by safeguarding price stability and financial stability, we help to the continuation of a stable economic environment. Fiscal limitations do exist for the member states, so we need to make sure that no available resources are not fully explored and not fully exhausted. And I can see another benefit for that as well, not simply in order to cover the major investment needs that we have right now in Europe. I think it's a matter for the EU itself to establish itself in the capital markets at the global level. That will also enhance the role of the EU policy making. It will also underpin the importance of the euro as a reserve currency, and it will enhance financial stability and also depositors' confidence. And that brings me to the issue, and you mentioned that before, when Marialena gave a description of how and to what extent the creation of the ESM helped the Eurozone. I think it's really important that we proceed with a complete banking union, which it's going to be accompanied by a crisis management framework, a deposit insurance framework. All of this together with the building of the necessary supervisory framework that it will help to promote more harmonization at the level of the EU, and finally facilitate cross-border investment. So, yes.
Also, Marialena, with a capital markets union, I mean, in theory, if it would exist, we would still need the ESM, I would guess. So how do you see the future role there of your institution? It's right.
So there is a different role. ESM is a safety net, is an insurance against unforeseen events. It's there to ring-fence, better prepare Europe in case a crisis hits. The capital markets, as Christina mentioned, is a necessary reform, is a necessary step to facilitate private investment. And why do we need private investment? Because we have to be very clear to ourselves that Europe is trailing behind other major economies, both in terms of growth and productivity. And catching up, making sure that we're not left behind, requires significant amount of public and private investment. And the only way that you can facilitate private investment is capital markets. You need to look into how business get access to capital, and especially small and medium enterprises, which is the heart of most of Euro area countries. You need to facilitate access to capital in order for them to scale up. So, but what is necessary to be done? I think is important for the banking and capital market union to become a centerpiece of the institution, of the next institutional cycle political agenda. The Eurogroup has identified 3 key areas: the architecture of capital markets, how to help businesses to access capital, and how to incentivize individuals to invest in capital markets. These are 3 very important targets. I think it's important now that the next steps are taken in order to have an actionable roadmap of how we can actually get these priorities into specific actions and bring it forward. This is of utmost importance for Europe not to fall behind the other major economies and strengthen their resilience to shocks. Christina also already mentioned climate change. We should not forget demographics. It's an aging population for Europe. We should not forget geopolitical risks that they are mounting and surrounding Europe. So it is a very, very significant reform.
And capital market union would definitely allow more private investment, because not everything, of course, can be done by the public sector. Where should we draw the line there? What should be done privately? What should be done publicly? Christina, do you want to comment?
What I wanted to stress out is that you need complementarity. Right now, the financial sector in Europe is largely dominated by banks. But banks and capital markets are interconnected, and they are complementary. So we need to make sure that we see things in a holistic way, and in a way that it will really facilitate investment. I mentioned before the NGEU and the necessity for Greece to continue implementing all the reforms that stem from the national resilience and plan. But still, what it is important, I think, is to bear in mind that the NGEU, which was a very successful element, and for me it was another proof of how Europe should face the challenges that come along its way. Still, it's a tool that it's going to end by the end of 2026. So the termination of the NGEU will bring member states with the necessity to find ways to finance their investment needs. And without a common tool, this will come with a very high cost, and it won't be beneficial both for fiscal sustainability and it will limit fiscal space. So we need all resources available to be mobilized.
But, and maybe Silvia, you can comment on that. Isn't the jury is still out there whether the next generation EU will have a significant effect? I mean, the money is being transferred to the governments, but they are still in the process of turning it into investments. And whether these investments make sense, we'll see. We don't know yet, because I mean, we know from the past a lot of white elephants can also be created. Do you think we will have a successor to the next generation EU program in 2026? Because at least I can report from Germany that there are skeptical voices.
I was about to say,
put it this way.
You should tell us. No, I think we should have a successor to Next Generation EU. Whether we will have a successor to Next Generation EU is a different question. On evaluating effectiveness, I think it is still early because investment has not been carried out completely yet, and so there will be a lag there, and that I think was to be expected, and it was also phased into the forecast of the effect. What I think we can already see is the reform element, which has been progressing according to the Commission's report across all the countries that have been beneficiary of the funds. To me, the biggest question from a macroeconomic standpoint is whether what we will see, we have seen growth that we have seen across Europe, but the question is whether we will see structurally higher output over the long run, so whether this has actually moved countries onto a structurally higher path for going forward, which I think was the intention of the plan since the beginning, and the reform element was part of that, right? So not just current spending, but also making sure that this translates into more sustainable growth going forward. I think when I say I think we should have a successor, I think it's because there are priorities that I believe should be centrally funded and at the same time probably would not attract so much private finance or interest. And defense, for example, is one of this. I think if we do move to a realization that Europe does need a common defense spending and a common defense capacity and capabilities, that should be financed by governments, and in particular, it should be financed at the EU level. So that might be an obvious area where to concentrate spending at the EU level going forward. I think what, in this respect, the reform of the Stability and Growth Pact of the fiscal rule was a missed opportunity because it might have been the occasion to start discussing what will come after Next Generation EU. It has not been the case because the entire discussion has been extremely difficult from a political standpoint, and the outcome of the discussion has been a compromise which is better than reactivating the previous set of rules, but also I think has some important limits when it comes to stimulating investment. And so because it has limits on stimulating national investment, I think it raises the stakes on EU integration as a whole, and it raises the stakes on the EU budget and what the EU will want to finance at the central level. So hopefully we will have this discussion soon enough. But I don't believe it is realistic to just let Next Generation EU expire without anything that comes in to perform the same or a very similar function in the future.
Do you have a point of view how we could finance defense and how we could finance defense in Europe?
Well, I think the NGEU structure might serve as a guide there. So you could have an EU fund for defense, for example, or something similar to what was done again during COVID with the unemployment spending at the EU level that was effectively financed by issuing EU debt, EU bonds, right? So this is not something that has not been done previously, but it is something that was extremely marginal and that has become a lot more relevant and sizable post-COVID because there were these programs to be funded. And also taking a bit, like putting on my my financial market participant hat for a second, I think also from the market standpoint, the fact of having this uncertainty on whether the size of the pool of common EU debt will significantly decline in the future because there won't be common spending is problematic, right? So EU issuance has been very successful in the past few years, but I think in part it was because everybody was expecting that this is the start of a new normal, so something that we will be able to rely upon for the longer term. If this was all of a sudden to prove not to be correct, I think this also undermines significantly intentions to, like boost the role of the euro as a reserve currency and also create a safe asset at the EU level that we do need, because once again, we don't have a truly European safe asset, unlike the US, and that has been a source of significant problems in the past. So we have moved towards that direction over the past 5 years. I think it would be a problem to backtrack on that and completely reverse course in 3 years.
Christina, the next question I would like to direct to you. We had in the last decade kind of a sort of conflict between the question what should we finance by monetary policy and what should we finance by fiscal policy, right? And we heard often from central banks saying the fiscal side is not doing enough and we have to do all the work in terms of keeping Europe stable. How do you see the current situation and how should we go forward? I guess you would say we need more fiscal support, and the monetary policy is about to stabilize or normalize. Is that correct?
No. Okay, I did it. You know, the primary objective of monetary policy is different from that of fiscal policy. The monetary policy is there to safeguard price stability. Fiscal policy aims to support output growth. The two combined, they can really, boost the economy in a very powerful way. So, still, as you very well know, there is a treaty prohibition on the monetary financing of governments. Central banks cannot finance state budgets. But central banks...
Well, they bought their bonds, right? They bought the government bonds, and they are still buying them.
Yeah, but those purchases programs, these purchases of public debt was scheduled for monetary policy considerations. And they were done with a lot of safeguards that would also make sure that the treaty requirement is fully respected. So we need to make sure that within our mandate, we are doing what we have to do in order to serve our purposes and our targets. Now, it is true that during the pandemic, the governments, the states, have accumulated a lot of debt. And that was, again, something that was deemed necessary in order to address the consequences of the crisis. The creation, and I'm insisting on that, the creation of the NGEU, which was a very successful element, which is a very successful tool, I think it's the appropriate answer that, that proves that since common problems, we are all facing common problems, need common solutions, need common approaches, and need to be addressed in a very collective way. And I think this should be, if you want, our guide on at EU level, even if it is really hard, because it's true that throughout the history of the creation of the single market, you would see that opposition to any change was greater to support. And in my view, this is explained by the fact that these changes have a lot of, if you want, widespread gains, but costs are really concentrated. But this should not in any way lower our ambition for more Europe, for more enhancement of the European Union architecture.
Can I ask you there, the ECB still buys bonds, right? Government bonds, at least those which are reaching their maturity, and then they buy them again on the market,
yeah.
And they created even a new instrument called the transmission protection instrument, right?
Which has not been used.
Sorry?
Which has not been used.
Okay, but they are still buying at the moment under the PEP program, I understand. If Greece has done now all these reforms and they have investment grade, does the ECB still need to buy Greek bonds?
I think that both asset purchases programs that were scheduled and implemented by the ECB are expiring gradually. So they were, it's important what I said before, they were adopted in order to serve monetary policy considerations. And they were necessary at the time in order to serve these purposes. And this is, I think, how, what totally directs and defines the ECB's policy on the issue.
Marialena, can I bring you in there? I mean, the 5 program countries that you had and have, right? So there was a combination of giving money and asking reforms, right? These 2 elements. What are the lessons that can be learned if we're looking ahead and if we want to finance other things in the future?
I think that the current experience, how the 5 countries are doing now compared to the euro area, shows that incentivizing countries financing with financing in order to reform is a good way to do it. The NGEU, the way that it was, and the fact that it was required from countries to come with plans and implement it in exchange for financing, this is also another good example. I have a few numbers which I think is very impressive. So the last 3 years of the NGEU, of the RRP, the implementation of the recovery and resilience plans of the countries, there were 6 million people participated in education and training, 1.4 million companies that have received support, 5.8 million people benefited from protection measures, and 22 million megawatt hours in energy consumption saved by all the reforms that countries have done. And you can find this number in the Commission report, it's published. But it's impressive. So it's always working in the benefit of the reforms when it's well incentivized by the countries. However, is the work done in terms of the reforms and what needs to be done in the next stage? I think that we're far away from that.
Also in Greece? Yeah.
Also in Greece, also in the other euro area countries, and before moving to how to finance the post-2026 investment needs, let us remind ourselves that out of the 800, of the bucket of the 800 billion of NGEU, only 156 have been drawn by the countries. So there is a pool there. So maybe the priority it is for countries to build up an administrative capacity and continue implementing their plans in a way to absorb until the end of 2026 the available financing for the green transition and digitalization, which is under the current scope. And of course, I fully agree with Silvia that Europe needs to put together and decide what are the strategic objectives for new investment, because investment needs time. You need private and public in order to get to the point of have an investable project. You need time. So these targets need to come into place as soon as possible. And again, I want to underline the fact that we should not forget that Europe is trailing behind the rest of the major economies.
And could also, from this reform experience, non-program countries learn? You know, I mean, it is, you observed a lot of reform processes, right? I was wondering whether this gives us general lessons also to other countries?
We can provide training if they want.
I mean, for sure, when a country is going through tough times, like the 5 countries went, and including countries, there is an easier, and it's easier to do an adjustment.
A willingness to change, right?
And the willingness to change, because the problem is there. But again, I will bring the NGEU because I truly believe that it's a very well done and delivered plan. All countries have put together an effort to have a plan, and they are trying to implement that. And this is within the euro area, across the euro area. So this mechanism of providing financing in exchange of reforms, it works.
Yeah, but if I might add, living in the country that receives the biggest part of the NGEU, which is Italy, a lot of money is not yet spent because the administration is a weak administration. It takes time. So maybe the deadline of 2026 is maybe a deadline that is too tight, but that is that still needs to be discussed. Yeah, exactly. Yeah. So I think we have to leave it here. The time has run out. So thank you very much for your very interesting and substantial contributions. Thank you.